Hi there, it's Chris Cortland with 719 Lending, and I want to show you, as realtors, a program that can help your buyers and sellers buy more real estate faster. How does that sound? Well, I use a program called the All-in-One Loan. Now, I'll refer to it as the Principal First Mortgage because it's going to pay more principal and interest over a period of time. Now, as a realtor, wouldn't it be good to know a loan program that can actually help some of your clients purchase more real estate faster? Good question. Let's see how this works. Now, first thing we have to understand is mortgage math. How does it work against us, right? Well, what's working against us is compound interest. This is the lender's dream. Now, Einstein said, if compound interest is actually the eighth wonder of the world. So, he who understands it earns it, the banks, and he who doesn't understand it pays it, usually the borrower. Now, with compound interest, if you look at your payments on your mortgage statement, you're going to see a lot more interest than principal. Well, we're going to show you how to flip that around. Now, to understand the numbers, let's look at the figures here. I'm going to show you the difference between effective interest rate and the note rate. A note rate gives you a principal and interest payment over the term. In this case, we're using $500,000 at 6.25%. The effective interest rate, because you're going to be paying back over $608,000 in interest, it's 121% effective interest rate. That's if you never pay ahead, right? Now, let's look at real quickly the first payment of the month, the first monthly payment. You're going to pay 449% more in interest than principal. But it gets better because look at year 15. We're all be down to 56% interest more than principal. And then it takes 128 months of payments before your your principal starts paying more than your interest. Let's look at $1 million loan for those realtors out there that would like to get into a higher echelon buyer, okay? They love this program. This is going to save them huge because let's look at this number. $1 million at 7.25 or 7.5% jumbo rate right now. It fluctuates, I know. But you're going to pay back over $1.5 million in interest. The effective interest rate is 151%. Huge, okay? Not the 7.5, that's the note rate. Effective interest rate is how much you actually pay. Let's look at the breakdown real quick. First month, 742% more interest than principal. Why do you think the banks want you to be in a mortgage and not get out of the mortgage? Oh, and you've heard about the 5 and 7 year ARMs, right? I mean, hey, guess what? Keep putting the borrower back in debt. I want to show you how to have these clients out of debt. They're going to love you for it. But it's going to take 250 months in this situation to get more principal than interest paid. And you can see the other numbers. First month's payment, 742% more interest than principal, and then 108% when you get down to 15 years. It's still huge amounts. Now, let's talk real quickly about time value of money. So we're going to use a 30-year, 15-year, and the only one to show you. $500,000 loan at 6.25% for 30 years. You're going to pay back over $1.1 million in total payments. Now, 15-year, we're going to use 9.25%. And I know the 15 years normally like a quarter to half a point below the 30-year. But this is, again, an example of how money works and how time works. So 9.25%, you're going to save over $182,000 in interest. Even though the interest rate was 3% more, you're still saving huge. Let's look at the all-in-one. The all-in-one program, 8.5% is where it's starting right now, and it varies depending on the year. But you're going to save over $419,000 in interest that you can reallocate toward more real estate purchases. Now, do you think your clients would like to save a lot of money without changing their budgets? Let's talk more. How do we do it? We have to change the amount of interest you pay to how much principal you pay every month. So you have to pay principal first, not interest first. So what is the all-in-one loan? It's a combination of a line of credit and a checking account. Now remember, here's the important thing. As realtors, you may have had a credit line back in the day, right? If you've been doing this a long time, or maybe, back 2000s, 2008, 2010. Remember the mortgage meltdown? Yeah, an exciting time, right, for all of us? But here's what happened was the banks, when you went in and you got your credit line prior to, they were shutting down credit lines. They were lowering the credit lines. They were freezing the credit lines. The nice thing about the all-in-one credit line is it's a 30-year term. It can't be frozen, okay? That's super important to understand. The reason is this, is that if you're using it for investment purposes to make money with, you want to be able to continue to do that. Would you agree? Okay. Now, on the checking account side, it works just like your bank does now. You've got the online bill pay, online statements, all that stuff. Okay. So works the same way. But now, just to give you a picture of how it works. So the top line on the green top line is that line of credit. Let's use $500,000. And the deposits, the monthly deposits, the vertical deposit there is net deposits. So let's just use $10,000 as an example, right? So $10,000 goes in. So it goes from $500,000 down to $490. Oh, wait, Chris. You say, oh, wait, I have to pay my bills. You're right. You have to pay the bills. So let's just call it $5,000 because of the way the graph is, and it makes sense. So $5,000 now is expended. So your balance goes from $490 back to $495. But the next month, that 10 grand goes in, $485. You got to pay bills, goes back to $480, then down to $470, and so on. So the stair step is a lot faster with the all-in-one loan. And again, without changing your budget. Now, how do we figure out whether the numbers work? Well, the way this works is a simulation calculator that we use. And so in this case, we're using $500,000 loan amount, just like I was doing before. The borrower, $10,000 net income. Now their expenses is $7,500 a month. Again, I'm just using numbers. $2,500 left over at the end of the month. With the calculation, the way the system works, it'll pay off the loan in 10.4 years without changing the budget. I keep saying that, but that's important to understand, okay? Now, how much interest is saved? $419,000. Oh, remember the Einstein thing? Yeah, with compound interest? Important to understand here as well, because the effective interest rate is not 121%, because you've accelerated the payoff, it's 2.25%. Huge difference, huge savings. So as it pays off, the black arc at the bottom is the all-in-one loan arc, payoff time, and then the blue line at the top is the credit line. Now you'll notice that the credit line goes out for a period of time and then starts to drop off. It's a 10-year time, and then it drops off because from year 10 to 30, they want to make sure that people aren't continuing to be in debt. They want to get them out of debt. Very important, so there's a safety factor here. Oh, the other thing to think about as a realtor is clients going in. These are clients that there's no default rate on this program. You look at Fannie, Freddie, VA, FHA. They've got default rates. Not in this program. Since 2005, since it's been selling, no defaults. An amazing time. Now, here's a one for the $1 million deal, 12.8 years in this situation, $15,000 net income, because again, somebody at $1 million is going to be making more than $500,000. So $1 million, $15,000 a month income, and then about 25% left over at the end of the month. And what happens is 12.8 years, but they're saving, look at this number, $875,000 in interest. Can you do something with $875,000, like go buy some more properties? I think so. So again, effective interest rate, not 151% for the jumbo, but 3.6%. Again, important to understand. Remember these numbers, effective interest rate versus note rate. Now again, the same arc. Let's finish up with this. Flexible credit facility for your home. So your client is going to be able to use it, reuse it, and buy more real estate faster. So as we finish here, as a realtor, you now have an opportunity to give your clients more value so they can buy more properties faster and take control of their financial situations. And you know what the best thing is? Those clients are going to love you. If you have any questions about this, love to go over it with you. Please give me a shout. 719-310-7270. Have an amazing day. Take care.